Good afternoon, Scott Redler, T3 Live. Welcome to today's recap. So it is Tuesday, first day of Chairman or Chairwoman, whatever you want to call her, Yellen's testimony. And basically market kind of just was a little choppy and then wound up trending, through the afternoon, through highs to another historic high. She did sound a little bit more hawkish, but then I guess not as hawkish as some thought, and you wound up getting some divergence type action that definitely threw a few traders a little off key or whatnot. So at least you're not like sinking your teeth into so many things. But rotation's been happening, money's been moving. You can go from sector to sector, setup to setup, and there's definitely a lot of movement. And you just have to kind of have your plan together, maybe a wide, diverse plan, and then narrow it down and wait to see where the money goes. As far as the SPX, I put this chart up every day. You look at it, from the red dog reversal right here to the quick move up to that, remember, 2064 top end of the range. We paused, had commitment, went through highs. The prior high, you never want to see a breakout failure, and it didn't. It digested for these 3-4 sessions. Gave you a little, gut check on that day to test the 8-day, and here we are now at 2116. So there's the S&P, and you go across different sectors. It seems like they're all taking turns. For the past 5 sessions, the bios have been the rock star sector, and then today, slight pullback. A lot of bears are pointing at the bios and saying, "Oh my goodness, look at the bios market's going to fall apart." But it just shows you that there's just money rotating. This was when you could have bought it. This is when it took out the highs. Some even made some two-way action short. If you look here, whenever you see something like this, that's a little bit of a topping tail after a big move extended from the 8-day. Some people were waiting. We talked about in my note, if it gets below 336, perhaps get a cute short, and you wind up having to move down to 332, and that's what a cute short is. Not too big. Now at this point, let it go sideways, see what's next. The Russells had a big move, towards the end of the day, kind of quieted down and looked as if you could have an IBB type of topping tail, but wound up not really pulling in much, just didn't really have much power. But all in all, nice move from the red dog reversal at the 200-day, the push through the downtrend, holding it and still above the 8-day moving average. Try and stay in it if it's above it and use a tier system around it. What did midcaps do today? Midcaps, same thing, following the 8-day. This trend has been, strong. It does feel every time we're going to pull in and we come into it, it might be different, but it hasn't been. So doesn't mean, you need to be all in, but anytime you press into a bit of a pull-in, that's not working. So I would avoid doing that until, further notice, until you see some kind of signal. And everyone's kind of scared of something like this, which could happen at any point where you have a nice trending move and then you have a pull-in that turns into an engulfing bar, and then it turns into a bit of a corrective phase. So that has not happened yet. So with that being said, just continue to measure this trend, which is strong, and stay with it. Goes same for the Qs. Qs broke that downtrend. Shorts were making a lot of money in this thing. Every time it came up to this downtrend, it failed, came up, it failed. This time held higher, showed commitment, and it's going, well above the 8-day. If you have the TV on in the background, all they're talking about is NASDAQ 5000, NASDAQ 5000. And you know what? I personally think it could get there. Might push through, see some resistance, and then we'll see what's next. But ultimately, I also think it could get above it and trend and be a normal market. The NASDAQ, in my opinion, is pretty healthy. The PE is a lot lower than it was when it was back in 2000, when it was just an air pocket with just a company that would announce .com and then it would go up 100 points. Those were fun times, but that's not what we have now. We have stocks and NASDAQ stocks that have low valuations, dividends, buybacks. They're making a lot of money. So with that said, maybe it's sustained, but you're hearing it all day long. I know it's annoying to hear, but it is what it is. So let's get to some of those. Today you had your first day in Apple where you had a little bit of two-way action. There hasn't been much two-way action in a while. We talked about setups. This was your nice setup after earnings. This is when it cleared for momentum. That was our nice 3-day trade. I personally stopped trading it then because I went away, and now I'm starting to get a little bit more active again. Actually tried it a little short today when it pushed through this 133 and couldn't hold it. In the end of the day, it's pretty funny what they did here. If you're on the VTF, you saw that I was trying to, kind of short the rally a little bit just for cash flow, nothing big, and grinded, and then boom, gave you a dollar move, big deal. I didn't take it home short because I don't like being short Apple, but if there was a day to be a little short overnight, maybe this is the one, and at some point, I think the 8-day catches up, might not be below this area, and then, you get a flag type pattern, and I might get back involved long or not. We'll see. After this trend here, I remember, this is when it went sideways, gave us another nice 3-day move, and then got a little bit choppier. So I expect it to get a little choppier as this move is long in the tooth. As far as Facebook and Twitter, a little frustrating, but I think we're a little spoiled as far as, Apple was such a nice breakout and it had continuation, it had power. Facebook just doesn't have that. Gave you a really nice day, which a lot of us made good money in here. And also remember where it came from, about almost a month ago from below 74. So it just didn't hold higher. I know a lot of us like when, a stock does this and then sits up here, goes sideways and continues. Facebook rarely does that anyway. So with that being said, it's pulled in a little bit, but look at it. It's still above the 8-day, the 21-day, the 50-day, still more than halfway. If you want to just like kind of measure a retracement here, some are saying, here's your red dog reversal, so you put your Fibonacci retracement from here to the high, and still, it's still above the 0.382% retracement, which also, winds up with the 8-day right there. So, 77.70, we'll see what happens. Tomorrow we know 78.10, which was today's low. So we'll see. Twitter also, not a heck of a lot of power, but again, people kind of lose sight that this stock coming into the year in January was 39. So look where it is now. I know it's not where it was way back when, but still nice move to start the year, and nice trade into earnings and a decent trade thereafter, just not as powerful as obviously an Apple. So if you're in it long versus here, don't overtrade it. If you're trying to play it with a tier system, make sure it holds this spot right there, and then at some point if it gets a little tighter, maybe we get some continuation. LinkedIn, I didn't even look at today. What did it do? Still tight, no real action there yet. The banks did go with the news. It was kind of interesting that the banks went and the TLTs had its first pivot, or first bounce above a pivot. You look at like Goldman, definitely a little frustrating. I know a lot of people on my desk was long into that news about the high end of their legal costs, and I guess it did hold the 8-day and extended, so it still looks okay. Morgan was in it the last 2 days. I didn't get back in it, and we'll see what happens here over the next session or so. If it could continue to hold, maybe it gets a little bit of follow through above 37. JP Morgan started off stronger than everything else, and look at this, it actually cleared that pivot, so it's showing you some strength and some leadership. Bank of America lagging a little bit, just trying to reclaim the 200-day, not much to do there. This morning I talked about the TLTs and talked about the different trends, and this was the accelerated trend that broke, and then here was your intermediate trend that held. You had a pivot right here, which was about 128.18. I actually was long it, made a little bit of money on that push. I guess I should have stayed with it all day because it gave you a nice trade. I just wasn't so sure it was going to stick considering the banks was so strong, and you had a few different divergences. But overall, talked about at least covering your shorts if you were short from here, and if you had a nice tactical move today, good job, and now you'll see whether it reclaims this area or puts in a lower high. But at this point, nice little trade. If you sold here, why not try and figure something out in there? Gold wasn't very convincing, but and it's probably pulled back more than it had to. A little bit of a bottom tail for the gold bugs that were looking for some type of signal to be long a little. This is your spot, and especially if you did sell the GLDs as it hit its measured move. We talked about that around 124. And you've been just sitting back saying, you know what, I sold well. This pattern told me, that the measured move from here to the breakout above 117 happened to be this, which it was. So if you sold in here, maybe this is a small little tactical spot. Some people were saying, look at the GDX. It also, I don't like this group at all, to be honest, but, people are asking me about it. So you have a small descending channel here. This is the last time it broke to the upside, and I guess if it were to trade above this, maybe you get something, but this is not leading. It's below the moving averages, and I just don't really like the miners or gold. I have time zero trades there, and it was a better trade a month ago or a month and a half ago, and now maybe there's a little tactical something or other there. Semis were strong today. Look at that, nice clean breakout. Pretty impressive. Look at this again, just to show you the break of the downtrend, a move away from the 8-day, and then it catches up and goes. Let's see, what did CLAC do today? Not much. What else would Broadcom do in the semi-land? Looks decent. What did AMAT do? People were talking about AMAT. I think AMAT looks pretty good. This one looks like if there's a semi to make a new high, this one looks like you have a nice bull flag that could see some continuation. As far as oil came in, tried to be strong all day, and market didn't care too much about it. We'll see what happens tomorrow, I guess. This was your igniting bar down here, where you had a nice little 20% move off the lows. Then it tried to get through the top end of the range. It couldn't. Now it's sitting here on the bottom end of the range where a decisive move below this, and again, the course will start saying new lows or test the lows, and that might add a little volatility. So take it easy with oil if you're in there, and let's see what the XLE is doing. Kind of trying to diverge away, but it's getting tight. If this here's that red dog reversal through the lows, if you're still long from there, congratulations, decent trade. If you're trying to see if there's another setup here, maybe this is your spot above. What is that, 81.40? Maybe it continues, but if it were to break below this 79.26, I'd take care. So watch, it's getting tight. Some guys made some money in IBM today. Broken stock. I don't love the name. It was one of the few stocks last year that I put in as a thesis to go lower, and it was a good one to do. And now it does seem like there's a little bit of attention here where maybe they want to get this to move back towards the 200-day. It's above the 8-day, and you just reclaim that. Something. Let's see Microsoft. Nothing much, trying to get back into the gap. Cisco, still best in breed, hanging near highs, hasn't really been able to extend, holding the earnings gap, so maybe soon. BlackBerry woke up a little bit today. I did buy some BlackBerry calls just because I hate the way it trades, but it seems like every time you get into the later stage of the rally, some kind of article pops up, and you can get some kind of spike. So I'm not sure when that happens or if that happens. So I'm not really in love with this stock, but technically I figured, maybe by next Friday's 10s, and if it gets above 1050 with some kind of whatever, you could see 11, and that would be a double. Maybe I just threw some money away because I made some good money in FSLR. This was yesterday. I didn't know any kind of news was coming, and it came, and boom. And I was actually I was out of those calls, which I tweeted within the first 20 minutes, and I think I bought them at 2 1/8 and sold them 7 3/4. So nice percentage move. There are guys out there that rant and rave about holding bonds for a year and a half to make 25%. As a trader, you find the right vehicle, you use the right instrument, you make 200-300%, in the right setup, or whatever, 5 to 7% in a stock. I know guys on the virtual trading floor were talking about this eyes. Look at this, new issue came out. It's been in this downtrend, and this morning, some news was out on it. The traded volume, guys were talking about getting in at 10, and if you did so, you made friggin' nice percentage without sitting in something all year. Look at the gap up. You use your rules here. Gap up. Didn't pull in, or pulled in, held a portion of it, which is right here, and then once it triggered above this $10, could have made $1.50. That's a big percentage move in a stock like this, and that's why a lot of guys love this job. You learn how to judge a stock's gap to see if there's continuation, to look at the chart and look at the volume, and some people sit for 4 to 7% for the year, and you can make 4 to 7% in a 1 to 3 day play if you identify the right pattern and you keep moving around. Sometimes you do the right setup, like an option, and and you make 250% in a day. So that can happen also. It doesn't happen all the time, but they say opportunities when preparation meets opportunity, and that's what that setup was in FSLR. Didn't want to take it into earnings because who knows what's going to happen there. And that's really it. Markets at highs, and you're going to see the headlines, and you're going to hear NASDAQ 5,000, and hopefully you have some long-term things working for you, like a 401k where you put money in every month, and hopefully you've been doing that for 10 years or 20 years, and if you did so, you have a nice amount of money saved away. I know you had to live through 9/11, you had to live through the financial crisis, you had to live through the potential of the breakup of the EU. You had to live through the debt ceiling. You had to live through all the new, doomsday naysayers, everyone out there saying how the stock market doesn't work for you, it's rigged against you. But if all you did is allocate $200 a month or $500 a month or $1,000 a month every single month, or whatever it is that you can handle, because you're not supposed to live above your means, you could have a nice nest egg. Besides picking winners, besides options plays, besides finding something like eyes, besides finding an apple and sitting in it for a few years. There's so many different ways. But the only way you're going to be able to take advantage of it is if you take accountability and you learn how to approach the market versus being frustrated that you read headlines and you're not involved. But if you're watching this, you probably are. So anyway, hopefully you had a decent day. It wasn't easy. Tomorrow, Janet speaks again, and we'll figure out what's moving, how we're going to do it, and we'll go on from there. Have a nice night.